please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The Asian markets have slid in early trade. Tensions have escalated. The Japanese market, that's the worst performing one right now with a cut of almost 800 points.
It's obvious that 9,700 now is a distinct possibility for this market. Perhaps not in one line, but at some point it should happen.
It's 1.5 down, 150 down on the Nifty, 450 down on the Sensex.
You have to look at market always on the basis of stocks. There's nothing like a market,
The market's very unsure, and when people are unsure where prices are going to go, they tend to sort of sit on the sidelines.
Non-performing assets which seem to be increasing, seem to burgeoning every day, and also some degree of uncertainty on the political front.
So far we've had a classical trend day. Every hour we have made a fresh incremental low. So for intraday recovery, you will need a significant rally from here on.
60 points is how much the Nifty has recovered from the day's lowest point.
Yes, and that recovery has been sold into. So a bit of a classical trend day is what we're having. Not quite at the low point yet, but it's clear that the market's back's been broken, and that particularly is being led by the banks. This closing bell, I am Anuj, and with me is Surabhi. Hi Surabhi, good afternoon.
Good afternoon, Anuj. I'm going to try and bat for the Bulls because I'm guessing they're so beaten out. But I mean, just looking at the kind of close we've had in some of our neighborhood markets, I mean, almost 1,000 points down on the Nikkei, 2.5–3% down on some of the markets like Hong Kong. How would you rate this? Yes, we've lost the 10,000 mark and we've been trading below that. But the fact that it didn't extend, it didn't go to a 2.5–3% kind of a slide, does that mean anything at all in this environment?
Considering we're already down so much, Surabhi, and we're down for our own reasons. So that's why perhaps we have outperformed the globe a bit. Look, today's been a bad day for the market, and the reason for that is, and in between, it's almost a classical trend day. I mean, short of that, 1 to 130 is when you see recovery, but that normally gets sold into at 130. The banks are in particular weak, and that really is a problem point for the market. So recoveries right now, this is not a kind of recovery which will scare any bear now. They want to now take this market up until expiry. Want to play this market up until expiry. That's my sense, that maybe there would be some more selling before Wednesday. Once all the excesses are out, once the last remaining bull is out of the way, then perhaps this market starts to recover. Perhaps April is a much better series for the market. Feb was an atrocious series. March has been even worse. And technical factors are at play right now. And the fact that there was this Dow futures recovery, but absolutely nothing in our market, that's also a bit worrying if you are a bull. But also advanced decline, it's improved a bit, but in isolation 1:7 is not a great advanced decline. Yes, if you say that from in the morning it was 1:50, now it's 1:7, you can take some comfort from that, but it's still 1:7. So whichever way you look at it, today has been a bad day, and 10,000 now is at serious risk. Right now it's not broken, but it's a serious risk of breaking.
And Anuj, to your point that, today's again one of the days, if you're trying to look at gainers, there's nothing much there apart from a little bit of buying in some tech names, even quality stocks. I mean, typically you'd say that this is the kind of opportunity that, a lot of people would go out and try and put in the cash in some, real long-term buying. But whether it's the HDFC Twins, whether it's Reliance, none of that seems to be falling in place now.
Yes, but one good thing which has happened today is that at least once again this reaffirmation is there. Though yesterday it looked like even IT was falling, that at least that as a space, Surabhi, is still fighting for the bulls. Position yourself in the last 90 minutes of trade. Remember, we started closing well early today. Ashwani Gujrar and Mitesh Thakkar now join us for closing strategies. Good afternoon. Ashwani, as we speak, that 1 to 130 pullback is getting sold into, especially on the bank Nifty. On the Nifty, still holding somewhere around the 10,000 mark. Your thoughts on the last 90 minutes of trade and stock calls?
See, the sense is that there's been selling all day. Now, whether we have more selling in the last hour, the odds often are lower because it's not like global markets are collapsing. In fact, Hang Seng, etc. have bounced back 350, 400 points from the lows. So I would think that possibly we could close better from here because banks have not covered any shorts, and in case there's a bit of short covering there, you could have a better time. But the recoveries will be marginal, and broadly I think today's day 99.50 has saved us the blushes. Maybe that will hold for some time, at least tomorrow, and then we take it from there. I also think that this series you will not have any remarkable recovery. But the way, large private sector banks are falling, what is now left to hold the market higher? Reliance, IT also, they are up 0.5% hardly. So basically it's getting to that point where nothing is being spared, and that sometimes is closer to the low than otherwise. But overall trend remains down. Just that since we've had so much selling today, we could have some pullback. As far as individual stocks are concerned, CESC is a buy with a stop of 878, target of 910. Z is a buy with a stop of 560, target of 585. And Asian Paint is a buy with a stop of 1100, target of 1150.
Okay, by the way, before we invite Mitesh, just pull out the intraday chart of Fortis. I think the market's reacting to the story that Nisha was breaking because, she was talking about the slump sale, essentially, Surabhi, which means that there's no open offer, as simple as that. And if the structure is being changed, and this is, of course, a source-based story, which Nisha has put on board, but the market's taken note of that, and that stock right now is 10% lower. Yep,
so it's a big slide coming in on Fortis out there. Well, we have a battery of guests lined up for you. Before we get to our first one, let's just get some more trading ideas. Mitesh is with us. Mitesh, your reading of the day and, of course, the calls that you're going with now.
So, good afternoon. We've maintained some kind of a negative stand, and I would still want to see more strength before I change my position. I think 10,050 is the pivot which I'm watching. If we start getting past that, then I think, we'll be covering the shorts and also exploring some kind of long positions. But yes, I think what we've advised is that given the fact that, and Ashwini also highlighted this, that we are quite oversold. We've been falling for the last 3-4 days. It's prudent to book part of a short position and tighten the stop loss on the balance one. So that is something which I'm okay with. The stock calls that I have right now is 1 buy and 1 sell. DLF to me still remains negative. It's broken the 200 average today with a gap down. So around 205, 206 would be a good short with a stop at 211 for targets of 194. And NTPC is a buy. It's keep a stop at 168. Look for a small movement to about 176.
Okay, gentlemen, we'll keep coming back to you. For now, Jonathan Schiesel of Ashburton now joins us. Jonathan, good morning to you in London. Thanks a lot for taking time out for us. Remarkable, right? All of a sudden, trade wars, Donald Trump tweets, and the markets reacting the way they are. Your thoughts on what's going on right now? Do you think it's a bit of an, overreaction, or do you think that equity markets should be genuinely worried?
Yeah, I guess there has been some complacency, low volatility up to this point. The reality is we shouldn't be too surprised with what's going on. Trump, I guess it's one of his earliest promises that he made when he was a candidate was to try and address this huge trade imbalance between the US and China. To our mind, and I think probably most of consensus, when you look at the numbers involved, it's obviously a tiny fraction of the size of the Chinese economy. We know that China is predominantly a domestic economy, but clearly a lot of people are still employed in the export sector. So it is important. It seems China seems to be quite, constrained in its responses thus far. But I think, I don't think one can be too complacent here. It could easily get out of control. But at the moment, obviously there's jitters going on and people just don't know how far this will go.
So, Jonathan, good morning to you. So, I mean, if we just leave this event aside, which was sort of, a bit of an unexpected escalation, overall, how do you rate the way equity markets have been rather sluggish, even US markets? I mean, what is the sense on the way you're expecting some of the emerging markets to shape up, including markets like India now?
Yeah, I think in reality, we've been fairly optimistic about this global recovery, that we still believe we're fairly early into a global recovery. Obviously, a global trade war could easily derail this recovery. So I guess that's what equity markets are trying to price in, the risk of a major global trade war. But the reality is at the moment, the underlying world economic dynamics is still fairly favorable. Growth is pretty good over most places. Emerging markets as a complex still look fairly good value. So, yes, everybody had been concerned particularly about developed markets and particularly about US valuations. And obviously, the more recent news over the last week or so with, the leadership in the US market has obviously been the tech stocks. And clearly, what's been going on with Facebook, there has been some pain in one of the leadership sectors. So I think the underlying dynamics have got a little bit more difficult, but I think from an earnings perspective and from a global growth perspective, things don't look too bad still.
Yeah, that's an important point, Jonathan, right? So what's happening with Facebook? Do you think that's putting a bit of a risk to the NASDAQ rally and also the big US rally? If the leadership space is under problem, in that case, could this derail the bull run there?
Well, I guess then it comes into question, and this is what we're all, I guess, coming to terms with at the moment, which is, will US tech stocks come under increasing regulatory scrutiny, and will they be forced to break up as monopolies? I think there's certainly a lot of people calling for that sort of move, and that would clearly be very worrisome from a stock perspective, let alone from a personal perspective. That's a different matter. But obviously leadership then under those circumstances would be pretty. I think we'd see a pretty brutal reaction from the market. However, I think we're still some way from that, and the reality of that sector is today it still looks pretty good to us, and I think potentially. I think it'd be a little bit early to say that sector's going to start giving up leadership. We were probably more in line with we'd rather have seen some sort of melt up before we get too negative than a meltdown, which a lot of people seem to think we're in the early stages of.
Jonathan, of course, beyond all of these global headlines and issues, India has had its own set of problems in the last couple of weeks, right? You, of course, own a lot of financial stocks here. What have you made of the manner in which this whole fraud issue is being dealt with? And, of course, the new RBI norms with respect to NPAs and, larger accelerated recognition of bad loans?
Yeah, it's been a painful few weeks. We had been sort of cautiously upping our weights of certain financials, particularly the corporate banks. Obviously, that whole area has come under a lot of pressure more recently. I still think anybody with a slightly more longer-term view, there's better value in that space now, and certainly if we hadn't already put additional monies there, we'd be looking at the moment. Again, in the short term, there's probably more downside to come in some of these names, but anybody on a medium to longer-term view, I think the corporate banks and financials in general are a great way of playing the India story.
It's really interesting you actually say that. So when you're saying corporate banks, you're saying we're probably at the worst, and would you be willing to now buy into only private sector corporate banks or even the large PSUs that lend to corporates?
Well, I think when you look at the valuations, we've seen quite a brutal and very fast derating of the private sector corporate banks, as well as obviously the PSUs. When you look at State Bank, for example, where it is on a price-to-book basis, yes, there's a lot going on. Clearly, a lot of government policy still seems to be coming out. RBI policy, we're getting new stuff all the time. It feels like we're reaching a point where perhaps these things will bottom out. But as I said, anybody with a slightly longer-term view with the current valuations that we've got in those areas, I think it's not a bad entry point.
Okay, by the way, just want to point out that Dow futures have slipped again and now are down 120 points. And if you take a look at the German market, that's now making fresh lows of the morning for them, of course. Same is the case with the FTSE 100 as well. So that is going to be a problem for the market that, rallies, recoveries will be sold into. And I think you're having that play out in India as well. Once again, the market, after trying to recover, is seeking lower levels again. Jonathan, IT, you had, of course, large positions in names like Infosys. But you reckon the Indian IT has turned the corner? Stocks like HCL Tech also have done well, of course. And do you think the Indian large cap IT space could generate good value from here as well?
Well, I guess what's pushing IT up, is more. It's obviously with, as you rightly pointed out previously, some of the domestically induced issues that the market's been coming to terms with. Obviously, external stocks like IT, which had been extremely cheap by historical standards. I think, everybody can see the relative performance more recently has started picking up again. We still have good positions in the IT area. Obviously, the other factor is that the IT stocks had previously, you could argue that the issues over Trump and US changes in regulation were already in the price there, and it's elsewhere that's now coming to, those issues are coming to bear. So yes, IT looks a good area to be in, particularly just for portfolio diversification as well. It just is doing the job at the moment.
Okay, and Jonathan, since we're talking macros here as well, in your China-India equity fund, are you more overweight on China now or on India?
So we have been a little bit more overweight China, not massively, for some time. Yeah, and that seems to be working reasonably well.
Do you intend to continue with that stance, Jonathan? Any other immediate changes that you're looking to make in either of your funds, India funds, with respect to what's happening here?
Yeah, so we have a model-based approach, which usually signals our change in weight between the two countries, and at the moment it's slightly in favour of China. But just from the Indian positioning, we are absolutely, definitely looking at some counters which we think are, have been coming down quite substantially, and are getting again back into more interesting zones. We don't try and pick the bottom here. We're just looking for value, and where we see value re-emerging, we'll start to look at counters again. So, yes, we are certainly looking into this sell-off to perhaps deploy, into new positions.
Would that include names like Eicher Motors and Motherson Sumi, which have been huge multi-baggers for you and your portfolio, Jonathan? But both of them have now corrected significantly from the high point. Yeah,
no, you're absolutely right. I think, obviously, Motherson, the numbers weren't so great in the last quarter. And obviously, the street for some time has been worrying about Eicher Motors and its growth rates. We still think that's overstated. We still have good positions in both of those counters. Obviously, it has been a bit of a painful couple of quarters with those stocks where they have come down. But we're very comfortable continuing to own those names.
But do you mind what's going wrong with Eicher in particular? Because we haven't seen this kind of correction in Eicher Motors even in the last market correction that we had, Jonathan. It normally is a stock which actually outperforms the market.
Yeah, I think certainly from when we first bought it, and it was certainly not on anybody's radar. I think one of the issues with the name was it became a little bit over-owned, particularly I think amongst foreign investors. And obviously, yes, the growth rates are starting to come down, and the story is over time will slightly change to a bit more of an export story, although the domestic story is still very large. Yeah, I think the fundamental issue is probably it was a bit over-owned. And obviously the valuation has been fairly juicy for some time. So I think investors potentially were looking to move away from the more expensive structural stocks, which you could argue Eicher certainly was, into perhaps the metal stocks and the cheaper financial stocks.
Actually, I was just going to come to metals, Jonathan. Hindalco, I believe, has been a big holding for you as well. But it's been a rocky year so far, 2018, for metal stocks. I mean, Hindalco's down 25%. Overall, a lot of other names are also lower. And now with all this tariff talk, steel, aluminum, etc., what's your view on some of these holdings?
So I think, yeah, we'd actually reduced significantly our position in Hindalco a couple of months back. We still do have a reasonable size investments in that company. I think probably at the fringes, steel is beginning to look more attractive. I think the steel counters have come under some pressure. And obviously the steel names in India, Tata Steel aside, are predominantly domestically focused. And obviously, with the recovery that we're seeing, I think the steel counters probably do look quite interesting here after this sell-off.
Not very positive. I mean, still, 468 points down on the Nifty bank. So, Anuj, you were making the point that, every time there is some attempt, there's fresh selling coming. And I'm guessing even this recovery, this would be largely shorts trying to take some profit home, right?
Exactly. And, just pull out the Nifty futures plate and the bank Nifty futures plate. I think the Nifty futures have slipped into a discount at this point in time. So this problem perhaps is going to remain up until expiry, Surabhi. That I think is quite obvious now. If 10,000 was a big support, you should have seen a bigger bounce from here. Also, the bank Nifty futures, if you see that, there also we started the day with decent premium. And now even on that, we have slipped into a bit of a discount. So obviously, at incremental recoveries, there's a bit of a selling which is coming back.
Yeah, okay. Well, that's the market for the time being. Let's also bring in our next set of guests. We have Mr. SP Tulsian of sptulsian.com as well as Prakash Diwan joining in. Good afternoon to both of you. Thanks for being with us. Mr. Tulsian, your thoughts on the day, the fact that barring tech, even some of the other blue chip names, whether it's HDFC Twins or Reliance, there's simply no sign of buyers emerging immediately. You've been making the point about end of March being a difficult phase also because of LTCG adjustments. Are you expecting more of this next week as well?
See, apart from LTCG, I don't think that LTCG is really the problem. There is a confusion. Those who have not been understanding this grandfathering provision of 31st January, I think you can count on the fingers with the shares which are ruling higher than the prices at which they have been ruling on 31st January. But looking to the queries which we receive from members, still they are asking that is there any worth or meaning in booking the profits now, ahead of 31st March to avoid the long-term capital gain tax. As I said, that without understanding the grandfathering provisions having given in the budget by the government as of 31st January. So maybe yes, some kind of selling is seen because of that ignorance, number one. But number two, which I have said in the morning, also the extreme liquidity crunch, and actually that is keeping the people on the sideline. And because of the 3 days or maybe virtually 4 days bank holiday, 29, 30, 31st. And again, 1st April of the next year being on Sunday. So taking all this into account, all these kind of adjustments, accounting straightening is all happening. And I don't think that there is anyone who is seen to be buyer. You have said about the IT only holding and other stocks are all seeing profit booking. So maybe this larger ones, maybe like HDFC kind of things, Reliance Industries, people are going for profit booking ignorantly, as again I've been repeatedly saying. So I think that this liquidity crunch, no doubt this trade war, trade tariff war of this global weakness. But if you want to take a comforting things, practically the Nifty has been, hovering within at a level of about 10,000 with plus minus of 20 points, which itself is seen to be quite comforting, looking to the volatility and the weakness which we have seen in the Asian market. So going forward, I think that this weakness, since you have asked that till what time I see, this March expiry is also coinciding on is happening on 28th. We don't have working on 29th, 30th and 31st because of the holidays, Thursday, Friday and Saturday. So I am quite positive that things will start coming back on the buying mode from April. Because if you take the corrections which has happened in the Nifty to the extent of about 10% as of now, 11,100 was the top, and now the Nifty is at 10,000, and we have been saying that, and still we maintain that we don't see Nifty falling below 10,000. I'm not talking of maybe 30-40 points here and there, because next 3 days you may see part recovery, part maybe very narrow and dull kind of range. But the weakness is the renewed buying is not likely to be seen in this financial year or maybe in this March series. But yes, come April, and we are having quite positive view. We hope that the renewed buying will start coming in because of the ease of the liquidity, which generally sees happening in the new financial year, and we are keeping the positive view on the month of April, where we will not be seeing this kind of volatility. In fact, apart from weakness, the volatility has been killing the market, the kind of unpredictable fluctuations. So both these should come to an end with positive bias practically seen for major part of April series.
Okay, within 20 points now of the low of the day, and tell you something, the global picture once again is turning a bit murky. The German market is now approaching a 200-point fall. And if you take a look at the Dow futures once again, not quite at the lows yet, but are almost getting there. Prakash Diwan is also with us. Prakash, good afternoon. Your thoughts on a couple of these stocks where we have seen some contra moves today. HCL Tech, of course, from the IT pack, and also Titan.
I think, Anuj, it very simply seems to be, when you see so much of red, it's a flight to safety that, drives people to kind of at least be, be invested into the market. But I think, the market has not given anybody a chance to even exit at decent levels. I mean, we saw a gap down open, and we are still close to that, or probably 25 points, in that range. So my sense is people will not do much today. Everybody is almost frozen into inactivity of sorts. I wouldn't be surprised if we actually have this entire fall being digested on very low volumes, particularly on the cash side. It's probably where the futures positions, single stock specific futures that are seeing a lot of short build up. And I think as yesterday you pointed out, the template of the market is sell on rallies. So any new up move in the market would probably be seen as an exit opportunity by most traders. So I think the pressure would continue, and we'll have to see at least a week of this pain go through before the likes of HCL Tech, or for that matter the Marutis of the world, will start fetching some interest. But I'm sure there's some value buying that's waiting to nibble into the market for specifically companies that are not going to get impacted in this crossfire between China and US and probably some of the other players.
Okay, Mr. Tulsian, it's not too much of a stock-specific day today because the overall market is down. But the one counter I wanted to get your views on is Fortis Healthcare. Some additional news that our colleagues are picking up that maybe, the manner in which the deal is structured, maybe minority shares don't get to enjoy an open offer. That's still within the realms of what we are hearing. But your thoughts on the sell-off today?
See, that is definitely seen a mild disappointment, because if the company would have changed the hand, entire thing, then definitely that company goes, the continuity is seen maintained, and then the new promoter would have come in the company, and that too, this hope got raised. Probably the slum sell theory would have worked, well, when the promoters were holding 34-35% stake. But once that has come down to zero, maybe 0.77%, I don't think that, or I was not thinking that the slum sell theory can really get explored. But even if so, naturally, if that happens, that the company will, the buyer, the prospective buyer will be seen to have the only acquisition of the assets, because he may be fearing. Though I don't think that the things are seen to be looming any kind of liability on the company per se, and there is any problem in that. But even if I presume that that case will go on, so open offer is not such a big attraction, but the continuity with the new promoter is seen to be a trigger, and that would have given the things. But if I take a valuation call at 150, if I just take the price, that gives a market cap of about 7,800 crore. And if I add the net debt on the consolidated basis in the company of about 1,400 crore and maybe 200-300 crore toward the expenses, tax liability and all that, it gives you an EV of 9,500 crore. And if you see the earlier promoter having divested minority stake of about 3%, sub 3%, at an EV of effectively 12,000 crore, it is difficult to say that what will be but I'm still maintaining that an EV of 11 to 12,000 crore is possible. And if you take that as a basis, and 9,500 crore, you eventually reach at an EV with 150 as a share price, then still you have an upside of about 1,500 crore, which works out about 15%. So people may not be thinking, but I think that even with the slum sale theory, the base for the share price is seen to be at 140. And once the talks of the entire company acquisition happens, as we have been saying earlier, that I don't rule out the possibility of seeing 175 also on the stock. So maybe with these news flows seen coming in, take a price range of about 140 to 165 as of now, where the share should trade into. And once the picture gets clear, then if the company gets acquired, then after the new acquirer comes in, you can expect the share to move to a level of 175. Otherwise, I don't see it falling below 140, even if the slum sale happens.
Okay, all right, that's one stock in news today. Let's take a quick break on that note. As we do that, views coming in on what this tariff war of sorts means for global equities in India. Here's a word coming in from Louis Alexander of Nomura. We'll be right back after this break.
The announcement today vis-a-vis China, first of all, we're not going to know the products for 15 days. Second of all, there will be an appeals process. There will be an opportunity to negotiate between the U.S. and China. So we don't really know yet exactly how bad this is going to be. The second question, of course, is what is going to be the retaliation? What is the response of other countries? And is that process going to spiral out of control? Look, there's no question this is risky. But in many ways, Trump, his bark has been worse than his bite. And we've seen that again in the announcement today. I think what we've seen from China and from other U.S. trading partners is a desire in the first instance to be proportional, so that they are going to, in some sense, respond with something that's of comparable magnitude to whatever the U.S. does. I think if it ends there, this isn't an overwhelming issue. If the retaliation is proportional to that, obviously that will have an effect on the U.S. As well. But if it holds at that, I don't think this is a disaster. But obviously there are a lot of ifs. And in many ways, what the Trump administration has done is crossed a bunch of lines that haven't been crossed before. and I think the risk to the global trading system is real.
Caps are recovering. Just see the intraday chart of Ajanta Pharma. That stock almost breaking into the green right now. Okay, now as we speak, it's in the green. So that one's moved from the low point. And ICICI Prudential, once again, just pull out the intraday chart of ICICI Prudential, and that stock as well, right now as we speak, has turned into the green. So there's been some recovery for a lot of mid caps. Pramod Gubi, head of equities at Ambit Capital, now joins us on the phone line. Pramod, good afternoon. Your thoughts on what's transpired today, and you reckon we are now more towards the bottom of the correction, or you think there's some more to go considering the kind of global cues that we've got?
Yeah, I think there could be more to go. I mean, all we can say is that the number of sources of uncertainty has only increased with this, so that'll make the market situation more volatile, and to that extent, I guess we will veer to the extreme on both sides. So I wouldn't be surprised if the market continues to correct from here on as well. But yeah, from a fundamental standpoint, at some stage, the market valuations start looking a lot more reasonable, and they should present a pretty strong buying opportunity, maybe another 5-10% from here. But yeah, the short term, the technicals seem to be fairly negative.
Pramod, so if you were to start sort of buying now, which would be the preferred sector? Would it continue to be IT, because that's where everybody seems to be hiding of late?
Yeah, I think IT has been a favorite sector for us for some time now. There's perhaps some more legs to go, given the demand situation in the US is clearly improving, and given various factors, there is a case that the rupee could depreciate from here. That could be an added tailwind for the sector. So that's one area. But more importantly, I think we will be positive on domestic economy-facing sectors as well, particularly private sector financials, private sector banks, particularly those with strong CASA franchises. As the interest rates increase, I think they should definitely benefit from rising spreads and margins. Also, consumption, particularly in a year going into the elections, you will see the government spend in rural areas. That's working in favor of FMCG in particular, in some cases consumer discretionary as well. So I think IT, private sector banks, and consumption seem to be good sectors, at least from the next 12 to 18 month standpoint.
Okay, of course, Ambit's view has been a fair value of 30,000 on the Sensex, Pramod. But what would be the key risk to that call, considering that we have already corrected, and as of now, this still remains a bull market correction?
Yeah, I mean, it is a fair value. It's not a target, price for the index.
Okay.
And as you can imagine, markets never settle at the equilibrium. They always overshoot on both sides. So to that extent, in the case of a correction, it could potentially go below 30,000 as well. We're not ruling that possibility out. But at 30,000 is where we think the market starts looking attractive from a valuation standpoint, enough margin of safety to be buying into good quality companies. Hopefully, if the market gets to that level, some of the small and mid caps will correct even more, presenting a great buying opportunity.
Pramod, what's your sense of liquidity from the HNI fraternity? I mean, are there still a lot of people on the sidelines? I mean, do you see them deploying at some point? Because mutual fund liquidity at least held up in February. What about the other portfolios?
Unfortunately, I mean, we don't, at least I don't look at the HNI client base, but I can comment on the institutional client base, which, like you mentioned, February was also a good month in terms of flows. March is seasonally a strong month, given the year end and so on. So that liquidity continues to remain strong. But more importantly, I think it's worth watching the global liquidity as the Fed balance sheet roll-off accelerate from the current, I guess, 10 billion a month to about 50 billion a month by October. Global liquidity conditions can tighten, and which can have its own impact on the Indian market as well.
Pramod, thanks a lot for your time today. It was good talking to you. That's, of course, the view from Ambit. Mr. Tulsian, your thoughts on Union Bank? That stock is down 9%. We spoke to the management earlier. A, the amount is very small. B, they say that it's all priced in. In fact, they've started to see recovery as well. Do you think it's just the case that just the fact that the market right now doesn't want to touch PSU banks? Could that be the reason the stock's down 9% now?
See, actually, market is too scared on this PSU bank fronts, because if you really see the amount having already provided for 100%, and this is a case of 2012, and in fact, as you have said, the amount is too small. So in spite of that, I don't think, because when the things are positive, when the things are negative, you don't apply any rationality. And equally is the case when the market is positive, you don't you just ride the exuberance. So I don't think that these are all rational things. In fact, if the market starts scaring, actually I was not expecting that market will be so fragile on PSU bank in taking these calls. But if we start taking these kind of calls, then I won't be surprised to see these kind of 1,000 cases coming out of closet, the old cases where 100% has all been made, because criminality element always exists in all the cases. Take for instance any default in term loan or any default in working capital. Obviously the manipulations and forgery and wrong furnishing of the statements and declarations have been given by the borrower. So if you start having now it's just a matter of time that when the things will turn positive overall for the market, at that point of time only the things will start. And probably the biggest trigger for the PSU banks, to turn these sentiments positive can just be the NCLT case, and the case that in point are two. One is Binani Cement and the second is Bhushan Steel. Even if we get to know the broad contours, that Bhushan Steel is seeing the write back of maybe 20%, 15%, I don't know what will be the amount, but even 4,000-5,000 crore definitely is going to get returned back. So that can definitely be, once the market will start, will stop looking to these old cases and get scared and will start taking a call that yes, the writing back of the provisions have all started, and that is seen positive. But it is very difficult. There is no rationality in case of Union Bank, which we have been seeing the case, the fall of about 9%. But because I was thinking that probably PSU banks have all got stopped, but if we keep scaring like this on old cases, I don't, as I said, there may be 10,000 cases of this, maybe 1 crore to 500 crore. So I hope that these things will stop once the sentiment changes, and for that, specifically for PSU bank, it can only start with the NCLT as a trigger, where the write back of the provisions is to be seen in 1 or 2 cases.
Okay, Mr. Tulsian, we thank you on that note. Of course, talk to you tomorrow again. Thanks a lot for your time today. By the way, 2:30 to 3:30 is the time when you see some selling in some of these large caps, and that's once again returning. Just see the intraday chart of HDFC Bank. That's made a fresh low of the day. So the sheer weight of HDFC Bank in the index is perhaps the reason that there's no significant recovery that you're seeing. Of course, the market is not quite at the low point of the day, which it made somewhere around morning, but that's the weight of HDFC Bank, and that's putting a bit of
some odd moves here and there. GAIL is trying to now punch through the flat line, recovering from the lows. There's some movement there. On the other hand, you have the likes of HUL, which is seeing a bit of a slip from the top. So, sporadic moves on individual stocks, depending on what you're looking at. Sandeep Wagle is with us this afternoon. Sandeep, thanks for joining in. So, not that easy. What are your trades now?
Afternoon, Surji. I would go with a sell in a Yes Bank, stop loss 291, target 276, and a buy in a Titan, stop loss 885, target 909.
Okay, Sandeep, thanks a lot for those trading ideas. 424 points gone on the Sensex now. The advanced decline is improving, by the way. It's now about 1:6. There's clearly some bit of recovery in some mid caps. And you spoke about ICICI Pru. Pidilite, for example, is recovering a bit. Manapuram is recovering a bit. Prakash, thoughts on Pidilite now that the buyback is over and this stock is actually closer to its highs?
Oh, absolutely. I mean, so what the market possibly seems to be doing, Anuj, as you rightly said, is to start nibbling into things that are neutral or indifferent to the trade war. Now, Pidilite is something that is completely on a domestic consumption side. So, and I don't know how we interpret this going forward, but because of this sell-off, the valuations have become fairly reasonable even on the consumption basket. I mean, look at some of these stocks which have got nothing to do with, absolutely nothing to do with what's happening across the globe except for sentiment. And that liquidity, the potential fear of liquidity drying out or the momentum ebbing out is actually making reasonable valuations back to the fore. So my sense is consumption will start emerging as a very strong theme, as will, so infrastructure and consumption will probably lead the next recovery, whether it happens in April, it happens in May. People want to watch results. But the likes of Pidilite, some of the paint companies, definitely are the ones that you would want to look at very actively, because technically there's no headwinds here, and fundamentally the financials only get stronger by the quarter.
Okay, Prakash, we'll let you go on that note. Thanks a lot for joining us. Have a good weekend, because we'll touch base with you next week. Anish Damania is with us, CEO and Head of Equities at IDFC. Anish, good afternoon. Good to have you on the show. Are you telling your clients to start buying now, or do you reckon that this correction has some more legs?
So, we have always been stock specific, even otherwise as well, and we have preferred stocks and sectors over a market call, and that is what we continue to do. But given the fact that we are starting to see actual sanctions coming in, or trade wars kind of starting to happen, is probably not expected to die down so easily or so quickly. So you will still see about 15 days to a month of volatility before a reality sinks in that everything is not that bad as what it is made out to be. And if in that process, let's say if the market corrects, it's an opportunity to buy the stocks which one was looking at. So among the stocks which one could look at, and clearly it has been set out as a trend, is that all those stocks which have earnings growth or earnings growth potential are the ones where we need to buy. And those stocks fall in the construction space, in the material space, in the metal space, in the OMC space, and in some of the select consumer growth stories as well. So all put together, what we are seeing is that anywhere where there will be significant earnings growth going ahead, those are the stocks which one should be looking at.
Okay, interesting point, Anish. Let me take you up on one of the sectors that you mentioned, metals. Because when I was looking at, of course, your Q3 analysis, metals had a phenomenal Q3, a great rally as well up to the end of 2017. And since then, things have really turned for the worse. Is this a buying opportunity in metals? If so, which part of the metal play?
Yeah, of course, these are buying opportunities, because what we have seen over the last 6-9 months is a very strong run up in the stock prices. So obviously there was an expected correction, or should have been a correction, and probably this gave the view that okay, these stocks need to correct a little bit. Now those stocks have corrected, and they have given some part of the gains which we have had over the last 1 year. I think they become attractive once again, because we don't see momentum in terms of the volume growth or in terms of pricing getting impacted so much. We like both ferrous as well as non-ferrous. In case of ferrous, we are seeing, as far as India is concerned, a great streamlining of capacities as we go by. While there is some capacity there, but given the NCLT process and all, there are attractive buying opportunities or buying opportunities by the existing players. So far as incremental capacity addition goes, there is some incremental capacity addition, but not probably to that extent as consolidation is happening. So steel sector to that extent presents a very good opportunity for buying right now. In case of non-ferrous, we are seeing that aluminum prices have probably not fallen that much, and on a YY basis they still look okay. Volume growth still continues to be there, and therefore players like Hindalco, which have corrected from about a high of 270 to 210.15 currently, are very good buying opportunities.
Okay, well, I'm just keeping one eye on the Dow futures as well, because that's become very volatile. Once again, almost approaching a 200-point fall on the Dow futures. So just keep an eye on that one. The German market is already at the low point. So this global volatility is still intact and is not going away anywhere. In fact, that entire recovery that you saw in the US futures market has been sold into, and how it turned into the green for the futures market, but now almost back to the low point. So that is how it is right now. Anish, of course, for us, the problem is that we have had our own issues. This month and this year, we have underperformed. And I'm not even talking about developed markets. We've underperformed Asian emerging markets by a big margin. Do you reckon once March is out and once some of these local issues are out, we could start to catch up?
So what we have seen so far is that, if you saw the months of January and February, and maybe to an extent December, that we had significantly outperformed the other emerging markets. And obviously, there have been developments at the local end in case of some of the results which came out on the elections and the by-polls. That has not shown a great amount of confidence into going into the election next year. And also in some of the state elections which are coming up over the next few months. So that has kind of posed some uncertainty. Secondly, what we have seen is liquidity situation has become a little tighter over the last 2 months or so, and probably that remains tight for the time being. As a result, what we are hearing from some of the clients, the domestic mutual funds, is that we are seeing some tapering of flows, and therefore to that extent, taking a pause. The FIs had always found that Indian markets related to the EMs were more expensive, so they have been sellers in that space and have been preferring other markets. So other markets have kind of outperformed India over the last couple of months. But as we speak into this kind of fall, over last 2 days, probably India has started to perform once again as compared to other emerging markets are concerned. However, having said that, we feel that some of these local issues are expected to persist. I can't take a call on how the flows are going to be, but what we have seen is that if there is a significant period where you start seeing negative returns in the market, the retail probably will pause a little bit more before putting in more money.
So that means that an extended period of market underperformance, Anish, in which case, I mean, what would your index targets be, or some sort of a range that you're working with for the next couple of months, or maybe 2018?
Yeah, so what we had at the start of the for the last 1 year, we have not changed that index target. We have not formally announced our targets for FY19, but I would reckon that we are not going to make any changes, and probably will be rolling over the targets around similar levels, which is a target of around 11,300 till March 2018 is what we had. So overall, so what we feel right now is that while one can say that India can underperform, however, having said that, we don't know how strongly the global markets will perform over the next 2 months. So giving a absolute target is not the right thing to do, and therefore what we try to focus on is that which are the stocks which we'll buy into correction, and I just told you about the kind of bets which we'll want to take.
All right, Anish, thanks a lot. It was good talking to you. That's the view from IDFC Securities. Well, the big talking point today, of course, is the global sell-off. So we'll take a break, and as we do that, let's hear out some more thoughts that we got this time from Chetan Ayya. Of course, we'll be back with the BTST calls.
Well, we think that these measures are actually less aggressive than what we feared, and I think markets feared at that point of time a few days back. There has been a reversal of some of the measures which were taken earlier, so that's positive. Clearly, the levying of tariff on Chinese goods imports is negative, but it looks like to us, while they announced this statement, the U.S. administration official did also mention that we're in the middle of a big negotiation with China. So it's unclear to us at this point of time whether this is a move by the U.S. to then eventually negotiate with China as well, just as they have actually reversed some of the tariff on steel and aluminum, or it's actually going to go further deteriorate from here. At this point of time, we think it is more likely to have a moderate impact on trade and growth.
I think it does have an impact on volume of global growth, even though it might be modest at this point in time, because, once you start something like this, you put in a degree of uncertainty in global trade and therefore global investment that wasn't there before. And to the extent that you are now putting uncertainty about where things will be going, to to that extent, global investment is going to be slower than what you expected before, and therefore it will necessarily have an impact on global trade. And for emerging markets, global trade is the lifeblood of emerging markets. So the impact on emerging markets will be larger than that in developed markets.